Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name, Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hongzhangyuan@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trần Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about VIC. VIC is the largest private conglomerate in Vietnam with a wide range of operations, including residential real estate development, retail real estate leasing, hospitality development and operation, automobile manufacturing, and technology research. As you can see on the screen, this is the report which was collated by Viet Capital Securities about VIC on the 20th December 2022, with the current price is 56,500 Vietnam dong. Target price 89,400 Vietnam dong. Last target price 112,000 Vietnam dong. Strong property sales recognition to support 2023 forward earnings. We reiterate our buy rating for VIC but cut our target price by 20% to 89,400 Vietnam dong per share, which is mainly due to our lower valuation for the property and real estate segments as we apply a 15% discount to our estimated RNAV for VHM and more conservative projections for VRE's new mall launches in 2024 to 2027 forward. We remain bullish on Vingroup's strong exposure to Vietnam's rising affluence class via its real estate arms Vinhomes, VHM, Vincom Retail, VRE, and Vinpol. Our 2022 forwards forecast for combined EBIT and financial income is nearly unchanged at 30 trillion Vietnam dong, $1.2 billion as a higher than expected EBIT loss for the industrial segment is offset by higher financial income from VHM's bulk sales transactions and VIC's divestment gains in 9 months 2022. We forecast 2022 forwards net profits after tax MI of 10.9 trillion Vietnam dong, $441 million. See Figure 2. For 2023 forwards, we forecast strong property sales recognition and a recovery of the retail leasing segment to more than offset EBIT losses of the industrial and hospitality segments. We forecast 2023 forwards EBIT of 12.06 trillion Vietnam dong, $486 million compares to an EBIT loss of 7.7 trillion Vietnam dong, $310 million in 2022 forwards. A sum of the parts value using the current market valuation of VIC, VHM, and VRE suggests the implied market valuation of VIC's effective ownership of other assets, including VinFast, VinPol, VinMec, and VinSchool, at $1.1 billion compares to our valuation of these assets at 1.4 billion US dollar. See Figure 8. We believe the upsides of VHM and VRE based on our valuations for these two stocks also make VIC's current share price attractive. Upside rates better than expected. EBIT margin of industrial segment due to higher than expected car sales export volume. Downside rate slower than expected sales launches of new mega property projects, slower than expected car deliveries. Strong 2023 forward outlook for recognized profits from properties and ongoing recovery of retail leasing and hospitality. We expect strong unbilled bookings from the employer, accounting for 63% of total unbilled bookings as of end Q3 2022 of 124.7 trillion Vietnam dong, 5 billion US dollar, and the positive pre-sales outlook for the Crown 1,000 low-rise units launched on October 10, with 80% receiving deposits after 3 days. To support VIC's property sales segments in 2023 forward. In addition, we expect the hospitality and retail leasing segments to enjoy a boost from tourism following the expected relaxation of COVID-19 restrictions in China, as well as the ongoing recovery of modern retail. VinFast to ramp up EV car production in 2023 to 2024 forward active capital raising plan. We conservatively forecast 2023 to 2024 forward car deliveries to rise 20%, 33% year-on-year and account to 30,000, 40,000 units respectively, which will solely come from EV models. We continue to expect VinFast to accelerate VF8 and VF9 deliveries from its current backlog of 58,000 reservations as of end Q3 2022. In addition to its newly contributes VF8, VF5, 3,293 free hours in the first 9 hours after becoming available. We anticipate the EBIT loss to remain high at an average of 30 trillion Vietnam dong PA in the medium term as a result of high depreciation cost in exchange for the scale up on EV production. Meanwhile, VIC continues to looking for fundraising opportunities to fulfill its plan for VinFast to become a global EV manufacturer through both debt and equity financing. Since the beginning of 2022, VIC has raised 730 million US dollar from international capital markets. Notably, VinFast submitted an F1 registration form to the US Securities and Exchange Commission in the December to prepare for the VinFast IPO. And now we move to the part named 9 months 2022 recap, core business recovery, VF8 delivery starts in Q3. Figure 1, VIC's 9 months 2022 audited results. Property sales. VHM's underlying property sales, including BCC, and bulk sales transactions recognized as financial income, amounted to 41 trillion Vietnam dong, 1.7 billion US dollar, less than 29% year-over-year in 9 months 2022. VHM delivered over 1,300 units at the Empire in Q3 2022, which contributed around 32% of VHM's underlying property sales revenue in 9 months 2022. Leasing. Recovery of retail leasing and minimal tenant support package in Q2 to Q3 2022 bolsters VRE's strong profit growth in 9 months 2022. Hospitality. The number of room nights sold in 9 months 2022 increased 29% year-over-year, mainly thanks to the recovery of tourism in Phú Quốc, Da Nang, and Quảng Nam. Industrials delivered 19,000 cars and 44,000 e-scooters in 9 months 2022. VinFast delivered the first batch of VFH EVs in Vietnam September 2022. EBIT with the industrials. VCSC comments for 9 months 2022 results. The high EBIT loss in 9 months 2022 was due to the recognition of the accelerated depreciation of assets related to the ending of internal combustion engine production that amounted to 4.4 trillion Vietnam dong, 177 million US dollar. Financial income. 9 months 2022 include one, free tax gains from the recognition of VHM's bulk sales transactions at Grand Park, the Empire, and the Crown of 11.7 trillion Vietnam dong, 472 million US dollar in Q1 and Q3 2022, to 5.9 trillion Vietnam dong, 238 million US dollar from estate sales of One Mount Road in H1 2022, and 6.9 trillion Vietnam dong, 278 million US dollar from the transfer of Windwaters Nha Trang while managing and operating the assets under a commissions basis in Q2 2022. Net profit after tax MI. The 9 months 2022 results was supported by one, the on-track delivery of the Empire, two, the improved operational performance of the leasing and hospitality segments, and three, divestment gains. And next, that is the 2022 outlook. Broad-based business improvements to partly offset higher than expected EBIT loss for VinFast. Property sales, mainly driven by retail sales and bulk sales at the Empire, Ocean Park, Smart City, and Grand Park. Leasing. Our 2022 forward growth forecast is mainly supported by one, an expected year-over-year lower COVID-19 support package for tenants. Two, a contribution for new malls such as Vincom Mega Mall, Smart City. Three, increasing occupancy rates thanks to new tenants. And four, improved tenants sales thanks to a recovery of the retail markets. Hospitality, we continue to expect Vinhall to recover from the low base of 2021 with strong domestic tourism demand. However, international tourism will remain limited in 2023 and 2022 forwards. Industrials will lower our projection for the number of cars to be delivered to 25,000 units, less than 30% compared to 2021. As VinFast has completed its transitions from ICE to EV and delivering its remaining ICE backlog in 2022. Meanwhile, we expect the delivery of EV products to be slower in 2022 due to a supply shortage of automobile components. Others, driven by additional construction services for bulk sales transactions that VHM has signed with partners. EBIT property sales, we decreased our revenue and EBIT forecast due to Q3 2022 bulk sales being recorded as financial income instead of revenue and EBIT as in our previous forecast. Industrials, we increased our forecast to reflect high COGS per revenue resulting from high depreciation cost. Financial income, we increased our forecast in accordance with 9 months 2022 results, including VHM's bulk sales transaction at Grand Park, Theme Park, and the Crown, and VIC's divestment gains. Financial expenses, higher year-over-year financial expenses, mainly due to increased debt to finance VinFast and foreign exchange loss of 1.6 trillion Vietnam dong, $35 million in 9 months 2022 forwards due to the Vietnam dong's depreciation compared to the US dollar. PAT, we decreased our PAT forecast as the higher than expected EBIT loss for VinFast outweighs the expected recovery of core businesses. 2021 results included a total of 11.9 trillion Vietnam dong, $517 million for COVID-19 related and charitable expenses, as well as expenses related to an ICE production and VinSmart's closure. We expect VIC's sponsorship for COVID-19 prevention activities to decline significantly in 2022 forward as management shared that 90% of charitable events will be contributed by VIC's founders and senior management starting in 2022. Now, let's go on to the 2023 outlook. Property sales recognition to more than offsets EBIT losses for industrial and hospitality segments. Net revenue, property sales, VCIC forecast assumptions for 2023 forward, mainly driven by bulk sales and retail sales at the Empire and the Crown, Ocean Park, Smart City, and Grand Park. Leasing, Our full year 2023 forward retail leasing revenue growth forecast is mainly supported by one, unexpected lower COVID-19 tenants support package. Two, full year contributions from new malls such as VMM Smart City opened in April 2022. And three, improving tenant sales thanks to a recovery in the retail market. Management targets to launch 6 new malls, including 2 VMM malls, around 46,000 square meters, GFA in Grand Park, and 66,000 square meter GFA in the Empire, expected in July and December 2023, respectively. And for Vincom Plaza, VCP malls, hospitality, we expect the relaxations of COVID-19 restrictions in China will have imposed recovery momentum to continue in 2023 forwards. Industrials, we conservatively project 30,000 cars units to be delivered, more than 20% compared to 2022 forwards, as we expect VinFast to ramp up production to deliver EV models, while no ICE cars are forecast to be delivered in 2023 forwards. Others, mainly revenue from constructions at the Empire. EBIT industrials, we do not expect depreciation expense of assets related to the ending of ICE production in 2023 forwards. Financial expenses, we assume foreign exchange loss of 722 billion Vietnam dong, 29 million US dollar in 2023 forward, as we expect the Vietnam dong will depreciate nearly 2% compared to the US dollar in 2023 forwards. And now I will share with you some information that will useful for you. Now let's take a look. Figure 4, VIC's industrial segment performance. Include Q1 2022, Q2, Q3, and 9 months 2022. 2022 forward VIC forecast. Figure 5, revenue and EBIT forecast by segments. Figure 6, VCSC's assumption and forecast for key segments. Property sales continues to capitalize on strong demand with its proven brand Vinhomes. Owns the biggest residential land bank in Vietnam with Vinhomes land bank of 168 million square meter of science area, acquired per various steps of getting final approval. Margins to rebound on deliveries of low-rise developments and bulk sales. 2023 forward underlying revenue and EBIT to grow on the back of strong sales at current mega projects. Leasing, leading shopping mall owner and operator with 83 Vincom retail malls, nearly 1.75 million square meter retail GPA as of end September 2022. Robust and steady growth from a solid pipeline of new mall expansion, and two, improving operating performance at existing malls from increased foot traffic with an upgrade tenant mix, among with the expected rollouts of metro lines. Hospitality, Vinco had a 46% market share in Vietnam's five-star hotel segments in 2018, based on its number of rooms. 32 hotels and resorts with 15,400 rooms. Rapid expansion in 2016 to 2018 thrust earnings, mainly due to guarantees expenses of villa conotel sales. Industrials, VinFast officially stopped receiving orders for ICE models in July 2022 to fully transform into a pure EV producer. VinFast received 58,000 pre-orders for VF8 and VF9 as of and Q3 2022, losses mounting in exchange for market shares in the medium term. Active capital raising plans for VinFast. VinFast announced that it will become a 100% EV company by end 2022 and completely shut down its production of ICE models. VinFast officially stopped receiving orders for ICE models in July 2022 to fully transform into a pure EV producer. According to the latest data disclosed by management, the new EV models have been well received in both domestic and global markets, with 60,000 pre-orders for the VF8 and VF9 models as of end Q3 2022. VinFast delivered the first batch of VF8 models to customers in Vietnam in September and exported the first batch of 999 VF8 car units to the US in late November, on track with the company's plan to deliver the VF8 and VF9 models both domestically and internationally by end 2022. We lowered our projection for the number of cars to be delivered to 25,000 units, less than 30% compared to 2021. Compared to previously 30% units, as VinFast has completed its transition from ICE to EV production and is delivering the remainder of its ICE backlog in 2022. Meanwhile, we expect the delivery of EV produce to be slowed in 2022 due to a supply shortage of automobile components. We conservatively forecast 2023-2024 forward car deliveries to grow 20%, 33% year-over-year, and account to 30,000, 40,000 units respectively, which will solely come from EV models and supported by VinFast ramping up production to fulfill the current backlog of VF-E34, VF8, VF9, and new model lines. We also expect sales volume growth of EV models will be supported by expansion of a nationwide charging station network as well as their company's showroom network expansion globally. Currently, VIC has completed most of the EV infrastructure in Vietnam, including the VinES battery production plant. 300 million US dollar investments expected to start operation in Q4 2022 and charging stations nationwide. Therefore, we expect CapEx required in 2023-2024 forwards for VIC with our projected average CapEx of 44 trillion Vietnam dong, 1.8 billion US dollar per year to mainly fund VinFast expansions to international markets, including global showroom expansion, a production plant in the US, and the production of new model lines. Furthermore, VIC is actively seeking various fundraising opportunities via both debt and equity financing to fulfill its plan for VinFast to become a global EV manufacturer. Since the beginning of 2022, VIC has raised 760 million US dollar from international capital markets, including a total of 625 million US dollar convertible bonds issued in H1 2022 with a 5-year maturity and option to exchange into VinFast shares owned by VIC, and a 135 million US dollar climate financing package with a 7-year tenor from the Asian Development Bank and several development financial institutions in October 2022 for manufacturing Vietnam's first fully electric public transport bus fleet and first national EV charging networks. On December the 6th, VinFast submitted an F-1 restrictions form to the U.S. Securities and Exchange Commissions to prepare for an IPO. VinFast intends to list its ordinary shares on the NASDAQ Global Select Market under the symbol VFS after the SEC declares the restriction to be effective, subject to market conditions. The number of offering shares and the IPO price range have not been announced. We have no factored the potential success of VinFast IPO into our forecast and valuation. However, if VinFast can successfully conduct an IPO in the US, we then believe there could be potential upside risk for our valuation of VIC as well as material impacts on markets sentiments for VIC stock. Now we move to the valuation. We continue to value VIC by using a sum of parts valuation and derive a target price of 89,400 Vietnam dong per share, which is detailed in the figure below. We lower our target price by 20% compared to our previous forecast. Previous target price of 112,000 Vietnam dong per share, mainly because one, we apply a 15% discount to our estimated R&AV for VHM to have more conservative projections for VRE's new market launches in 2024 to 2027 forwards and a 0.5 PPT higher cap rate assumption. And three, VIC's higher net debt balance forecast at end 2022 forwards, which are partly offset by four, a higher reported assets value of the industrial segments at end Q3 2022 and end Q2 2022. And five, the positive impact of rolling our target price horizon forward to end 2023 forwards. Our valuations for VHM, R&AV approach, and VRE capitalization rate approach contribution a total of 89% of our R&AV for VIC. We continue to use a book value approach for our valuation for the industrial segments as there are no public details on CapEx and delivery plans in 2023 to 2024 forwards. We believe the upside of VHM and VRE based on our valuation for these two stocks make VIC's current share price attractive, especially following the substantial correction of the company's share price. Please find more details for the property sales and retail leasing segments in our December the 14th VHM update report and November 2020 22nd VRE update report. Tier 7 valuation summary. Tier 8 market value compares to our valuation. On some of the parts value using current market valuation of VIC, VHM, and VRE suggests the implied market valuation of VIC's effective ownerships of other assets, including VinFast, VinPol, VinMass, and VinSchool at $1.1 billion compares to our valuation of $1.4 billion. Recommendation history. Tier 9 historical VCSC adjusted target price compared to share price. With the blue color, it's actual price, and the red color is the target price. You can see. And the final part is the financial statements. Take a look for more details. Yeah, and that brings me to the end of my presentation about VIC. Hope this video and some informations will be useful for you. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can support you. So thank you for your listening and see you next time.